Good day, ladies and gentlemen. Once again, I will be recording one of the questions from the question bank for MAC3761 and MAC3701. It's mostly process costing and also transfer price and standard costing variance, not much, only one variant. I think those are the main questions that I can highlight in here. Now I will be analyzing the information before I read what is required, then after we respond to the requirement. But very important in response to the questions at the advanced diploma level, more especially for MAC3761 and 3701, you need just to have an overview of the fact that we have the BYEBOER division, meaning all the information behind or below here is with regards to this division. Then after we have another division somewhere, let's check if we have another division. Another main heading says investigation to introduce a formal transfer price policy, meaning this company does not have a transfer price policy, but that does not mean that they don't transfer goods and services in between the divisions that they have, but they don't have a policy in place. Then after we have the honey processing division, which is division number 2. And when there are two divisions, there's a likelihood of a transfer price scenario where a minimum price must be calculated. Then we have some information regarding process costing, then requirements after. Let us go through and analyze this is a lovely question and see what new things it has brought to our attention. Now, MITOLI BYEBOER PTY LTD has for 5 years, for 5 generations, farmed bees for the production of an exclusive brand of honey, which is called MAP for sale. For 5 generations, meaning this is coming from grandfather. Now this is the 5th generation running this business. Wow, I wonder what is their secret. The secret to its long existence are customer centricity, high moral and ethical standards, and being a responsible corporate citizen. The company has a December financial year end, and they are using absorption costing system. Very important that they bring this in the first paragraph. In some of the questions, they don't tell you which system is the company using. Then after, they will ask you in the requirements and say, based on the information or the extract of the information provided or the article provided, tell us which system is this company using. Then you must say it is absorption system. Then you extract some of the elements or the components that or some of the indicators that this is an absorption costing system. Like for instance, your gross profit, your cost of sales, because under the absorption we say sales less cost of sales, that will give us the gross profit. And also the accounting or the adding of the fixed cost in the calculation of the cost per product, that can also be one of the indication that the company is using absorption costing system in the case where it is not mentioned. And also if the company or the requirement is you are being asked in terms of the direct method, obviously we have sales minus variable cost. That will give us contribution in total or contribution per unit. So now if you are provided with the information where there is sales less variable cost and there is a contribution, that will also be an indication that the company is using direct or marginal costing. And values all of its inventory using the first in first out method, FIFO method. Very important also that to be highlighted. MB's operation takes place in 2 divisions, namely the BYEBOER division and the honey processing division. These 2 divisions are managed by independent management teams, and BYEBOER division farms with the bees from the harvest of raw honey, while the honey processing division processes the raw honey into MAP for sale to the public. Another one is harvesting the raw honey. Another one is processing that raw material into becoming MAP for the sale to the public. Although there is no formal transfer price policy that currently exists between the two divisions or in this organization, the BYEBOER division sells some of the raw honey that has been harvested to the other HPB division at a negotiated price between the two divisions. So they will do the negotiation in terms of the price, but that negotiation seems not to be aligned with the transfer policy. The rest of the raw honey harvested is sold to the external customers. Then now we go to the BYEBOER division. Then it further says that the BYEBOER division is an exclusive and specialist bee farming operation. The division owns and utilizes for farming its entire 30-hectare farm. So this company has a 30-hectare farm that they have. So now we are under the BYEBOER division. They have 30-hectare farm. They have 30-hectare farm, which they use entirely, and this 30-hectare farm becomes their maximum production capacity. Maximum capacity is their 30-hectare farm, and it says they utilize it for farming. The division owns and utilizes farming the 30-hectare farm entirely. They say entirely, so they maximize the capacity, or they maximize this farm for harvesting the bees, the bee hive. In fact, the honey. This farm is rich in nectar producing tree. Nectar is a natural feed for bees. So this farm is very rich in nectar producing trees, and these nectar trees are naturally fed for bees, meaning bees will feed themselves naturally there in order to produce more honey, which is the raw material for the next division. To optimize this natural fed around the entire farm and to reduce feeding costs, BHP positions 5 wooden farming beehives. In order to optimize this natural feed around the entire farm, remember our farm is 30 hectares, around the entire farm, and in order to reduce feeding cost, the BYEBOER division positions 5 wooden farming beehives, hereafter referred to as beehives, in each hectare for the duration of the financial year. In other words, each of the hectares out of the 30 hectares will be allocated 5 wooden farming beehives. And this is in order for us to reduce the feeding cost and to optimize the natural feeding around the entire farm. Now we need to ask ourselves, how many wooden beehives do we have in total? Because each hectare has 5 beehives. So now let us calculate our total beehives. Total beehives. Our total beehives will be 30 hectare times by 5 wooden beehives in each and every hectare. So that will be 150 beehives. We put these wooden beehives in each hectare, 5 of them. Then after, it further says that this positioning represents the maximum number of beehives and yields 3 harvests, 1 in the period ending April, 1 in the period ending August, and 1 in the period ending December. So now these beehives, they are an indication of the maximum number of beehives, meaning we cannot put more than that. That is the maximum number of beehives that we can put. Then now we then do our harvest over a period of 4 months. meaning these beehives will allow us to produce a harvest every end of 4 months or every beginning of 4 months. In the month or in the period ending April, which is January, February, March, April. Remember, the accounting period for this business is at the end of December. They have a December financial year. So now January, February, March, end of April, then we have May, June, July, and August, then September, October, November, December. So we do harvest 3 times in a year. So now that means if we need to know now how much will be our budgeted harvest, we need to first get to know how much are we harvesting per beehive. Then I would further say that for each of these 3 harvest period, the standard harvest quantity is 24 kgs of raw honey per beehive per harvest, meaning every time we harvest we get 24 kgs in each beehive. Remember, there are 5 beehives in 1 hectare. In total we have 150 beehives in the 30-hectare farm. So now we harvest 3 times in a year, and each harvest from each beehive per harvest yields 24 kgs. So now we need to calculate our budgeted maximum harvest. Budgeted maximum harvest. Budgeted or maximum harvest per year. Then that will be 150 beehives times by, remember, each beehive produces or we harvest 24 kgs. Then this will give us a total of the harvest per period. 150 times by 24, this is 3,600. We harvest 3,600 kgs per period, meaning January to April, that will be 3.6, May to August will be 3.6, September to December will be 3.6. Therefore, now remember, we need it for the full year 3,600 kgs. We multiply this by 3 because we are harvesting 3 times in a year. Times by 3, that means our maximum harvest per year will be 10,800 kgs. This will be the maximum harvest per annum. Maximum harvest or budgeted harvest per annum. I don't want to say budgeted, let me just say maximum harvest. Maybe that could be their budget at the same time. We have information that has been extracted from the actual results for the 4 month ending April, meaning for the first 4 months. The first 4 months, we have an extract of the income statement in a table format. We have the details. We have a second column where they normally say note in this column. Then after we have the rent figures and question marks that go throughout. We are provided with our sales, and our sales are a question mark, but we need to check that under note number 1.1. Under note number 1.1, we will find the details of the sales. Therefore, now 1.1 details are under 1.1 in order for us to answer the question mark that we have under our sales. We don't know how much was sold. Then it says under the additional information related to the actual results. This information is related to the actual results above. Then now it says the total actual harvest for the period. Remember, when they say for the period, meaning for the period ending end of the month of April was 3,500 kgs of the raw honey. No harvest losses occur during the period. That means what they harvested is what they harvested. There was no loss that took place in between. Beehive division sold 2,300 kgs of the total actual raw honey harvested to the external customers at 60 Rand per kg. Now we are under 1.1 calculating our sales. We are calculating our sales, and our sales seems to be divided into 2. 1.1 we have our sales. Then we have external sales that were made. Then we have our external sales. Our external sales, we are told that 2,300 kgs were sold at a price of 60 rand. 60 times by 2,300, that means 138,000 rands will be our sales revenue from an external sales. So if we do have external sales, there is a likelihood that we also do have internal sales, because above we were told that some of the units are sold or transferred internally, yet there is no transfer policy in place. Then after, obviously, if we had 3,500 that was actually harvested and sold 2,300, and no losses that took place, therefore now 3,500 minus 2,300 will leave us with 1,200, and the 1,200 is likely to be the sales to the internal division. Then it further say that the balance, which is the 1,200 of the remainder, the balance of the actual raw honey harvested was transferred internally to HPB division at a negotiated price, which is 25% below the selling price to the external market. Meaning now from the 60 rand of the external market, 25% will be a discount, or will be negotiated. That 25% must be a discount, so that we sell to the internal division at 45 rand per unit. So now that becomes an internal sale price, which is 25% less than the sales to the external market. So now let us then account for the internal sales, which are 60 rand times by 75%. Remember, we have deducted 25%. Multiply this by the number of kgs. Remember, this will give you an amount of 45 rand. If you did the calculations aside, then you are welcome to bring the 45 rand only in here. But please show the reference. Times by 1,200. This gives us a total of the sales revenue received from internal sales as 54,000 rands. We add 138,000 rands. This gives us 192,000 rands. This gives us 192,000 rands. So now this will be our total sales as 192,000 rands. Our actual sales that appear on our extract of the income statement, that will be 192,000 rands. So now with regards to sales, we are done and dusted. We can go to the second line item from our income statement. We have the feeding cost, which is 1.1. There is the question mark. Then our feeding cost, feeding cost 1.2. We go straight to 1.2 and we read more about the feeding cost. In other words, 1.2 is our feeding cost. Let me write feeding cost so that we know that under 1.2 we are calculating the cost of feeding the bees. Feeding cost, obviously we have to feed the bees in order for them to produce the honey that we want. Then now it further says that the raw honey yield is dependent on the feed ration, how we feed these bees. As a standard, the bees are fed a 15 kg fed ration to yield 1 kg of raw honey. That is the standard information. What is normally done? Beehive division fed the bees a daily ration. Take note now. Beehive division fed a daily ration. Although the standard is 15 kg in order to yield 1 kg, we don't know if that 15 kg is it daily or is it weekly or is it 3 daily or 3 days a week. It says a standard, as a standard, the bees are fed 15 kg fed ration in order to yield 1 kg of honey. Is it per day, per week, per month, per quarter? That we don't know. But now the second one, where they actually fed the bees, they are telling us that they fed the bees daily 3 kgs. then if the feeding was daily, then we'll need to know how many days were the bees fed. Could it be a period of 4 months, where it could be equivalent to 120 days? If we assume that 1 month is 30 days, we don't know yet until further information. Beehive division fed the bees a daily ration of 3 kg of purchased fed per beehive. That means each beehive, take note, each beehive, remember we have 5 beehives in 1 hectare and we have 150 beehives in the 30 hectare farm as we calculated above. We said if we have 5 beehives in 1 hectare, then we have a 30 hectare farm. That means we have 150 beehives in total. Now in each beehive, out of the 150, we feed 3 kgs. So now if we want to know the total feeding per day in the total in our 30 hectare, it will be 3 times by 150. That will be a day feeding for the maximum of that 30 hectare. So now let us calculate our total daily feeding for the whole hectare. Total daily feeding for the whole or for the entire 30 hectare farm. For the entire 30 hectare farm. That will be equal to 150 beehives times by 3, which is equal to 450. That means that will be 450 kgs. In other words, total daily feeding in kgs, just to be specific, total daily feeding in kgs for the entire 30 hectare farm will be 450 kgs, meaning on a day we feed 450 kgs on a daily basis. We feed 450 kgs on the entire farm that we have, which is a 30 hectare farm. Then now we need to check how many days did we feed these bees over the period of 4 months ending April, which is January, February, March, April, because our harvest is for a period of 4 months, our information is for the period of 4 months. Then now it says, despite only a slight increase due to inflation, the feed was bought at 63 Rand per kg or per 60 kg, a price that was noticeably higher than the related set standard. So now that we know that we are feeding 3 kg of the purchased fed, then we need to ask ourselves, at what price did we purchase this feed? So now they are giving us 63 Rand per 60 kg, 63 Rand per 60 kg. So we divide by 60 kgs in order for us to get a price per kg. So it will be 63 divided by 60. That means the feeding price per kg is 1 Rand 5 cents. So now this brings us to the cost first. Then after we say total feeding cost per day, total feeding cost per day, total feeding cost per day, and our total feeding cost per day will be 450 kgs that are fed in a day times by the cost per kg, which is 1 Rand 5 cents. Remember, the 1 Rand 5 cents is 63 Rand divided by 60 kgs. So now we will find out that times by 450, the cost of feeding the 30 hectare farm is 472 Rand 50 cents per day. So now that will be the feeding per day. Then we'll definitely need to know now the total feeding for the whole period, because our information so far is on a daily basis. It says the bees were fed on each of the 120 days during the period. So now they were fed for 120 days. Let me just read further. the division had no opening or closing feeding inventory during the period, and the bees feed market is currently controlled by a few monopolistic cooperatives. It is very important to note this because if we have a few monopolistic cooperatives, that means these people can decide to do what is called price setting, where they want to set the price. So now we might see that some of the cost of buying the fed can go up. Why? Because of the price setting. Why? Because these are monopolistic people. Now, if this cooperative are monopolistic, they can partly control the price by doing what is called the price setting. So now the bees were fed for 120 days, which is in a period. Now we have our total feeding cost for the period. Total feeding cost for the period. Our feeding cost for the period will be 472 Rand 50 cents times by 120 days. Then this will tell us how much 120 days did we fed our bees. 56,700. This becomes our feeding cost for the period. 56,700 is our feeding cost for the period. 56,700. Please don't forget that this amount is the cost from the kg that we produced. We fed that and we produced 3,500 kgs. So now if you want to know the feeding cost per kg or per unit, it will be 16 Rand 20 cents. That is feeding cost per unit or per kg. We now have our fixed farming overheads under 1.3, still a question mark. Fixed farming overheads under 1.3. There is where we are. Fixed farming overheads. That is what we are about to calculate under 1.3. 1.3. That is our fixed farming overheads. Fixed farming overheads cost fixed farming overheads cost. Our fixed farming overheads cost are equal to, and we read further, the fixed farming overheads are absorbed on the basis of budgeted beekeeping hours. Take note of that, meaning the base of our fixed manufacturing overheads is our budgeted beekeeping hours. Let us look at our budgeted beekeeping hours. The beehive division employs 3 full-time beekeepers, each working an 8-hour per day shift for a total of 240 days per employee per financial year. Now I want to highlight the fact that the direct labor cost in this case is not a variable cost but a fixed cost, because our labor hours do not affect our harvest, meaning how much we harvest is not affected or is not connected, is not interrelated with the direct labor cost. In further terms, it means if we harvest 2,000 kgs, we still incur the same 240 hours, we still have the same 3 employees that are working the same hours. So the number of kg that we harvest or we produce in terms of the honey, raw honey, is not connected with the direct labor cost. So now the direct labor cost in this scenario is not a variable cost because it does not vary with the number of units that we produce, or it does not vary with the number of kgs that we harvest of the raw honey. So now highlight the fact that the direct labor cost here is a fixed cost. Now we need to be able to calculate our budgeted labor hours first. We need to calculate our budgeted labor hours. of which we have 3 employees who work each 240 days and they work 8 hours a day. So this will be 240 times by 3 times by 8. This gives us 5,760 hours, beekeeping hours. So these are the budgeted hours. Remember, our fixed manufacturing overheads are based on labor hours. So now for us to calculate what is called POR, predetermined overhead rate, we need to say budgeted fixed manufacturing overheads divided by budgeted base, which will be 5,760, which is our beekeeping hours, if we have to go to that direction, depending on the information that we are provided. Now, it further says that the total actual hours for the period under review were 2,800. Now, the minute we have budgeted labor hours of 5,760, in fact, 5,750, and that is budgeted, we have actual, it is very likely that we'll calculate our predetermined overhead rate and multiply it with the actual base, which is the actual hours, in order to get to the applied manufacturing overheads. Now, the annual budgeted fixed farming overheads of 69,120 for 2019 financial year will be incurred evenly throughout the financial year. That means now we can calculate our POR, which is predetermined overhead rate, which is budgeted manufacturing overhead 162,920. Just verify 69,120. That will be 69,120. Now we have the 69,120 divided by budgeted beekeeping hours 5,760. This will give us the predetermined overhead rate. 69,120 divided by 5,760. That will give us 12 rand per hour, per beekeeping hour. Beekeeping hour. Then after, we need to calculate what is called applied manufacturing overheads. Applied fixed manufacturing overheads. Applied fixed manufacturing overheads. Remember, applied fixed manufacturing overheads is POR, which is predetermined overhead rate, times by the actual base. Now, our base, remember, it was beekeeping hours. Then the actual base will be actual beekeeping hours. And our actual beekeeping hours was provided to us as 2,800. That is how you calculate the applied manufacturing overheads of 33,600 rands. Then now, the minute we do have the applied manufacturing overheads, it means we are likely going to be given actual fixed manufacturing overheads. Actual fixed manufacturing overheads. Then we have to compare the applied, meaning the estimated fixed manufacturing overheads, from the applied manufacturing overheads, in order to say, have we overestimated or underestimated our fixed manufacturing overheads, which will affect our cost of sales. The actual fixed farming overheads for the period under review were 30,000 rands. The actual fixed farming overheads for the period were 30,000 rands. So now that is why I took that 30,000 rands. The difference of 3,600 is over-absorbed fixed farming overheads. We have over-absorbed fixed farming manufacturing overheads of 3,600. Remember, this amount will be recorded under our cost of sales. Then after, I will say, but we actually incurred less than that. So now that will be the difference. Then now we have calculated the fixed manufacturing overheads as 33,600. That will be recorded in the income statement. That will be 33,600 rands. 33,600 rands for the period. Direct labor cost is given as 64,800. Then after, we have preservation costs under note number 1.4. Then we go straight now to our preservation cost. We go to our preservation cost 1.4. Preservation cost 1.4. The cost of preserving the honey. Preservation cost under 1.4, that is where we are. Then it says a special preservative is added to the raw honey sold to the external customers only. Only the sales to the external customer we will incur the preservation cost. Therefore, now the preservation cost does not become an incremental cost because it is the cost incurred for external purpose when we are dealing with the transfer price. The actual cost of this preservation was 1 rand per kg of the raw honey. No preservation or preservatives are added to the internally transferred raw honey. Now the question is, how many kgs of raw honey were sold to the external market? It was 2,300 of the sales that were made to the external customers. And we have incurred, or we incur 1 rand of that per kg. So it will be 1 rand times by 2,300 kgs that were sold to the external market, meaning 2,300 rands will be the price that will be incurred for preservation. So now that will be 2,300, 2,300 will be our preservation cost. Then we go to the next one, and under 1.4, that was all, and that was all that we needed to do. Then we go to the next one in the income statement. We have other variable manufacturing overheads of 14,000 rands in total. Remember, if we need this per unit, we need to divide by 3,500 units that were actually manufactured. Then it will be 14,000 and sold to divide by 3,500. That will be 4 rand. So now our other variable overheads per kg will be 4 rand. We have further variable selling and distribution costs of under note 1.5. Selling and variable selling and distribution cost under 1.5. Variable selling and distribution cost under 1.5. Then we have variable selling and distribution 1.5. Variable selling and distribution we have to go through that information and we analyze all together. The variable selling and distribution costs incurred on the external sales only were 1 rand 5 cents per kg of the raw honey. Again, is on the external sales 1 rand 5 cents. So now that will be easier. We say 1 rand 5 cents times by the number of units that were sold to the external market. Then that will give us the 1 rand 5 cents times by 2,300. This will be 2,415. That will be the variable selling and distribution cost that we have 2,415 responded to. Then we are done with the income statement and we have completed the number that we're supposed to have completed. Then now we need to go straight to numbers 1.6, 1.7 and 1.8. 1.8 very easy, no opening or closing inventory of any type. So meaning we only have 2 analyses to make. Beehive division insures its beehive with Clint Trail Insurance KTI at a total fixed monthly cost of 4,000 rands. Remember, when we say monthly fixed cost, the fixed costs are also used in the calculation of the break-even point. So now this fixed insurance cost will be added to our fixed farming cost, added to our direct labor cost. That will be our total fixed cost. We divide that by the weighted average contribution per product, where we have 2 products. Then we have this monthly, which is 4,000 from January 2019. 3 beehives with a carrying value were stolen. Let us wait about the stealing and deal with the insurance cost. That is 1.6. Let's deal with the insurance cost. That is insurance expense. Our insurance is 4,000 per month. For how many months in a period? We have 4 months in a period. Because if we are doing income statement, or will be required to do income statement for 4 months, but the information provided in the table of the incomplete income statement, it is for the period ending 30th of April. So it is very likely that this information must be for 4 months. Now 4 times 4, you will know that is 16,000 rands. So now that will be the insurance part, where the insurance is an expense. Then we were told of the stealing of the 3 beehives with the carrying value of nil. That means these beehives had a 0 value in them. They could not have been sold and make money. And they were stolen, and immediately they were replaced. Immediately replaced with the new ones. And on the 20th of April, PTY, remember, 20th of April is within the current period, meaning on this date, PTY confirmed that they will pay 605 insurance proceeds for the stolen beehives. However, this would only be paid at the end of May. Now, the minute PTY acknowledges that they will pay, therefore, this division has earned this income at the period it was confirmed. And incurred, that is for financial accounting 1. So they earned this income, so it must be recorded at the period it was earned, not at the period it was actually received, unless you deal with it from a SARS point of view. Then SARS will speak a different language, not the period earned, but the period received. Now let us continue on that same note. If we note that the carrying value of the beehives was 0, so whatever we receive becomes a profit. Whatever we receive becomes a profit. In other words, for us to get a profit, we have to say the carrying value minus the selling price. That will give us the profit on the disposal of an asset. In the case where, yes, the sales minus carrying value will give us a profit on the disposal of an asset from a financial reporting or financial accounting perspective. So now in simple terms here, we are doing the same thing, acknowledging the 605 as a profit, which will be recorded under our other incomes. So this will be profit on proceeds of insurance. Profit on proceeds of insurance, 605 rands. So this will be recorded under other incomes. This will be recorded under cost, which is a cost or an expense, and this will be indicated as a profit in the income statement and recorded as so. Then we go to 1.7. We go to 1.7 and see what has 1.7 brought for us. Before we go straight in response to the requirements. 1.7, we are told that Beehive division has contracted Mapendana PTY LTD to paint the division's administrative building at the beginning of each harvest period. Remember, our harvest period is 4 months, meaning beginning of January, beginning of May, beginning of September. The contract provides for the total painting cost of 12,000 per financial year. So now, meaning our administrative building painting cost will be that amount divided by 12. Admin building painting cost will be equal to 4,000 rands, which is 12,000 rands divided by 3. That will be our administrative building painting cost for the period of a 4-month. It further says that incurred evenly throughout the financial year. The reason why this is very important to be specified is because we need to divide. In this case, it explains why are we dividing by 3. It means the amount is equally spread throughout the year. In simple terms, we don't incur 10,000 of the painting cost in the first 4 months, then we incur 1,000 in the next 4 months and 1,000 in the other 4 months, or 4,000, 3,000 and 3,000 or 5,000, however you can divide that amount. They are telling us that it is incurred equally or spread equally across the year, so we can divide by 3. That means every 4 months will share equal with other 4 months. Then after it further say that Mapendana came highly recommended. Mapendana came highly recommended. Therefore, it came as a shock to the BYEBOER division that Mapendana is constantly being accused of shady painting work on municipal projects in the main, dangerous and confusing road markings. He also does dangerous and confusing road markings. This is risk of lives. MP is also known for painting the road red every weekend by hosting parties for teenagers and encourages underage alcohol use. Then this is not a good partnership to partner with. The reputation of our organization can be in disgrace. Now we'll talk about the non-financial aspect, but it's exactly the thing that you see that this guy is doing. Having a disregard of other people is not a very, very good thing, and encouraging alcohol abuse in South Africa of the teenagers, considering the impact that alcohol is already doing, is really not a good thing. Some people, customers will run away from this, and we're also not supposed to be associated with such kind of companies. No opening or closing inventory of any type. Then after we are investigating the introduction of the formal transfer pricing policy, and we need to read this one before we do the requirements, because this is the next division, but the transfer price is with the previous or current division we are with. Investigation to introduce a formal transfer price policy. MB is considering introducing a formal transfer pricing policy, and this is to be implemented from the 1st of May 2019. And in this regard, the budgeted transfer price for the remaining harvest period of the 2019 financial year will be based on the actual results of the last 4 months ending April. And we know the actual result that we produced 3.5 and we sold 2,300 to the external market, and the remainder was 1,200 left to be transferred internally. Hence, for each remaining harvest period, the budgeted raw honey yield and external sales will be 3,500 and 2,300, meaning we are planning to produce or harvest 3.5 of the raw honey, and we are planning to sell 1,200 kgs to the external market. That means what will be left for the internal division will be 1,200 kgs. Now it further says that the budgeted raw honey internal transfer is 1,500 for the period. Then there is a problem now. There will be loss of units, because what we want to transfer to the internal division is less than what is available. So now we need to calculate what is called the lost units. We need to calculate the lost units, which is already obviously 300 units. Then that will be under transfer price investigation of transfer price. Then we need to say budgeted harvest is 3,500 kgs. We deduct external sales. Our external sales are 3,500 expected. Then we have available for internal transfer, or available for internal sales is 1,200. HP honey processing division requirements are 1,500. They require 1.5, so there is 300 that will be lost units. From the BYEBOER division. So the BYEBOER division will have to lose 300 of their sales, which used to go external but will go internal. Moving further on that note to the requirements now, straight to the requirements. Then we read what is required based on what we have dealt with so far. Number 8, calculate BYEBOER's budgeted annual harvest kilograms for the period for the financial year ending 2019 financial year. We are calculating the budgeted annual harvest. We have calculated the budget annual harvest already. Our budgeted annual harvest under number A was in the first information. Budgeted annual harvest is 10,800. This is our response to the question. That is our number A, budgeted annual harvest, showing all the calculations. So I'm not going to be copying those numbers or those calculations because it's the same numbers. We are to prepare the actual statement of profit or loss and other comprehensive income, which is called income statement for the 4-month period ending April 2019. Remember, the information from the month ending April 2019 was provided to us above, and it was an incomplete extract of the income statement, meaning what do? We just complete this income statement, and we have already done so. Now let us go straight to the completion of the income statement. I hope it will fit here. Let me start another page just in case it does not fit. Then we are doing number B. We have our sales. Our sales are 192,000 rands. Then we deduct our cost of sales. Our cost of sales, remember, we have no opening inventory, we have no closing inventory. All that was produced was all sold, both internally and externally. Then now we have to say our cost of sales. Cost of sales, what do we have? We have our feeding cost, 56,700 as our feeding cost. Then we have our feeding cost. Then we record our feeding cost of 56,700. That will be a negative. Then we go to the second cost, fixed farming overheads, 33,600. This could be the last one though, but it is still not a problem. We're doing it in the order. Feeding, fixed farming overheads, fixed farming overheads, fixed farming overheads. fixed farming manufacturing overheads of 33,600. This is the applied manufacturing overheads in simple terms that we calculated. Direct labor cost, which is fixed direct labor cost. Our direct labor cost, it is 64,800 rands. Then the next manufacturing cost, it is the preservation cost of 2,300. We have preservation cost. Our preservation cost is 2,300 only to the external market at 1 rand per kg. Other variable manufacturing overheads is 14,000 rands. Other variable manufacturing overheads are 14,000 rands. Then we separate that. Then we'll have our cost of sales, 56,700 plus 33,600 plus 64,800 plus 2,300 plus 14,000. Let's verify again. 56,700 plus 33,600 plus 33,600 plus 64,800, yes, plus 2,300 plus 14,000 rands. That is 171,400. That is our cost of sales. Now we need to account for the over applied absorption. We need to say plus over applied manufacturing overheads. Over applied fixed manufacturing overheads, 3,600. Now we then go now to the calculation of our gross profit. We have 192,000 minus 171,400. That gives us 20,600 plus 3,600. That will give us 24,200. That will give us 24,200. That is an amount of gross profit. Now, remember, when we have over applied, we add in this case. The reason why we add, we have our actual fixed cost that were 30,000 rands. So now the reason why our gross profit, if you saw minus 3,600, before we added this, our gross profit was 20,600. Why? Because we have over deducted by 3,600. Take note of that. The reason why when I said 192,000 minus 171,400. Remember, the 171,400 does not include the over absorption. It must be recorded separate as a line item after the cost of sales. Then now, the reason why we get this 20,600 is because there is a fixed manufacturing overhead that is over absorbed or overestimated by 3,600. So now, if we say this is 20,000 or this 20,600 is our gross profit before the over and applied, meaning we are saying our gross profit is over, it has been over reduced by 3.6. Hence now we say plus that figure. Sometimes you will find out that this will be included in other exercise, most usually in other institutions, it will be included under the cost of sales. When it's included under the cost of sales, the treatment gets to be different. But still, if you record it under your cost of sales, it will still be recorded there as a plus. Unless you record it under the cost of sales ledger account, then after you bring the total amount of the cost of sales, after it's already adjusted. Then let's go to our other incomes. Under our other incomes, we have profit on proceeds from insurance, which is 605 rands. Then after we have other operating costs. Other operating costs. Under our other operating costs, we do have an operating cost, which is an insurance expense and the variable and selling admin cost. Let us check those expenses. We have variable selling and distribution 2414. Then we also do have insurance expense. Let us start with that insurance expense we calculated above. The insurance expense that we have amounted to 16,000 rands. Insurance 16,000 rands. Then we have our variable selling cost. We had our variable selling cost, which we would have calculated as 2,415. Our variable selling cost, variable 2,415. We had painting cost, admin building, painting cost, that was 4,000. It was 12,000 divided by 4. And then after we have 16,000 plus 2,415 plus 4,000, that becomes 50, no, it can't be 50, 2,415 plus 4,000 plus 16,000, that is 22,415. Minus 605 minus 24,200, then this gives us 2,390 as our net profit before tax. That is gross profit plus and minus, that will give you the 2,390 as our profit before tax. Now we have dealt with number B of the requirement. I think it was number B. Yes, we dealt with number B, and number C we had to explain why budgeted fixed cost will be or should be used in preference to the actual fixed production overheads rate. The simple reason is very simple. It's because the use of actual figures or the use of actual rates causes delay in the calculation of the product or a service cost. So that is why we decide to use the budgeted, because the actual fixed cost will delay the calculation of the product cost or service cost. And at the same time, The establishment of the monthly rate result fluctuation to overhead rate should therefore be throughout the year. It is recommended. I'm just reading now something provided. Now we go to number D. Number D says that assume procurement manager of BHP provides you with the following variance analysis information. 55,200 kgs of actual fat purchased were made at 63 Rand 60 cents per 60 kg of fat. Then we are also informed that an adverse or unfavorable variance of the purchase price was 6,073. So we can say that we are on the purchase price. That was the adverse variance. We are required to calculate the standard fat purchase price per 60 kg. Per 60 kg. Remember, when you're doing the variance for the price of material price, we say standard price minus actual price. And these are per kg. These are per kg or per kg or per liter or per meter. Now, having to be required to calculate price per 60 kg means we first have to convert this to be per kg, then we convert the final answer to be per 60 kg. So now meaning we'll have to say 63 divided by 60, it will give us 1 Rand 5 cents. This will be our actual price per fat. So now let us make use of the information provided and see if can we be able to get to the answer that they want us to get to. Let me use this site. This is our number D that we are busy with. We have our standard price minus our actual price times by actual quantity purchased. Actual quantity purchased is equal to minus 6,072 rands. That is the adverse variance that we are provided with. They told us that the variance is adverse and it is 6,072. So let's proceed on that same note. Our standard price is what we are looking for. Our actual price is 1 Rand 5 cents. Remember, the 1 Rand 5 cents is the 63 Rand divided by 60 is equal to 1 Rand 5 cents. Then times by actual quantity purchased. Actual quantity purchased are 55,200. Then the variance is 6,072 unfavorable. This is the unknown that we are looking for. So remember, both mass brackets off. Multiply this, it will give us 55,200 standard price minus multiply this by this, we see 1.05 times by 55,200, it gives us negative 57,960, which is equal to negative 6,072. I'm saying negative because I said standard minus actual. If you say actual minus standard, then this will be unfavorable but positive. Then after we go on that same note, we take the like terms to the other side. 55,200 standard price equals, when 57,960 goes over the equal sign, it becomes positive, but the 6,072 is still negative. Then after we say minus 6,072, it gives us a total of 51,888. Obviously, we'll divide this 55,200 here so that this cancels this. Then we are left with the standard price on this side. The standard price. Then whatever you do on the left hand side, you also do it on the right hand side. We divided this side, then also divide on this side. Then we say divide by 55,200. This gives us 0.94 cents. This is per kg. 0.94 cents per kg, because our information was in kgs. Then after, and we converted the price here to be per kg, not to be per 60 kg. So now we need to convert this standard price from being 0.94 per kg to be equivalent to 60 kg. because they said it must be per 60 kg. Times by 0.60, then we get 0.94 times by 60. That gives us 54 and 40 cents. So now this is our standard price per 60 kg. But our standard price per kg is 94 cents. Then now we go to the next part of the requirement, taking it slowly but surely moving there. Identify and briefly discuss 2 ethical concerns regarding Mapendana that could permanently harm MB's reputation through its business association with MP. So now we're looking at the concerns that can impact the business so negatively. There is something that I've skipped. Identify and briefly discuss 2 ethical concerns regarding the Mapendana. Or there's a second part. Except for the reasons already provided above, provide the 2 possible reasons for the above variance to be unfavorable. What are the other 2 possible reasons? I mentioned one of the reasons. One of them is the fact that these organizations are monopolistic organizations. So there's a possible price fixing by the few suppliers in the market. I mentioned that it could be price setting done by the few monopolies, where they are now restricting the supply in order to do the setting of the price. The second one would be maybe our standards might have been incorrectly set. Maybe we set our standard incorrectly. That is why the variance is unfavorable. Remember, our standard per kg it is 0.94, but the actual is 1.05. So maybe this standard was set incorrectly. It doesn't matter either we say it's per 60 kgs, because when it's per 60 kgs, we have got 56.40. Here, when it's per 60 kg, it is 63 rand per 60 kg. So maybe we set our standard incorrectly. That is why the variance is unfavorable, because actually it's more than the standard. Another reason it could be the increase in the demand pulling up the market forces, which means it's purely the supply and demand market forces. That could be one of the reasons that leads to this price less than to that price. Then you can also read more of those reasons. Only 2 were necessary in this requirement. Then after, we are to briefly discuss the ethical concerns of the Mapendana who is doing shady painting. Only 2 ethical concerns. The first concern is the fact that Mapendana constantly accused of shady painting works on the municipal projects. Now, MB association with a company that is known for substandard work on a municipal projects has a propensity to negatively affect the views and the support of the general public, which is the customers. The fact that we are associating with this company that does shady painting for the municipality can have a negative effect on the views and the support of the customers or the general public. The second one are the dangerous and the confusing road marks. If you remember from the information, there were dangerous and confusing road marks that this Mapendana does. And remember, and the explanation of that would be the fact that road markings are essential for the safety of the road users. Now, any dangerous and confusing road markings may result in road accident and fatality. MB, meaning our organization, cannot afford to be associated with a company that has a total disregard for human safety and safety of all other road users. That is the explanation now of the dangerous and confusing road marks. You can go further to the hosting of parties and the encouraging of the underage alcohol abuse. Just explain the same thing, that we cannot be associated because the reputation of the organization can be harmed by the perception of the people about the company that we have associated with or doing business with. Just explaining the same thing that you see in the number F is where we are. we are to calculate the budgeted minimum transfer price per kg of the raw honey at which BHD will be willing to transfer the budgeted required raw honey to Honey Processing Division for the harvest period ending 31st of August. Now we are calculating the minimum transfer price. At what price shall we transfer? Remember guys, whenever you are required to do the minimum transfer price, first thing you do, you calculate if are there units that will be lost. That's the question. Are there units that will be lost? The answer is yes. Here are the units that will be lost. These 300 units were supposed to be sold externally, but now they will be transferred internally. Why? Because what we're planning to transfer is 1,500. What we're planning to transfer is 1,500, just to make it clear, is 1,500, but what is available is 1.2. So some of the units that we use to sell external, of which we used to sell external 2,300. Why do I have 3.5 here? We sell 2,300 external. Therefore now we need to take 300 out of what we used to sell external and we transfer internal. So now because of that, some of the units will be lost, which is 300. The minute we know how much will be lost, then we can calculate now our contribution on lost sales. Remember, the contribution must be external contribution, meaning taking all the variable cost for selling external. But when we do now calculate the transfer price, we only take the incremental cost, excluding the variable cost for selling external. Now, meaning this is the calculation you start with. I'm not going to be repeating this one. Then after you're done with this calculation, then you come to the calculation of the contribution. Our contribution is the selling price. We know the selling price is 60 Rand less variable cost. Our variable costs are made of many variable costs, or quite a number of variable costs. There's one that is not in here that we need not to forget, and I think all of them are here. We have our feeding cost. Remember, feeding cost is 16 Rand 20 cents, which is 56,700 divided by 3,500. Remember, that is what we plan to harvest every 4 months going forward. That was the plan, and it was highlighted also under this let me read that. In this regard, the budgeted transfer price for the remaining harvest period of the year 2019 will be based on the actual results of the 4 month ending April. That is why now we continue taking the 3,000, because we assume that we are going to, or we plan that we are going to harvest 3.5 as it was actually done in the previous 4 months, or the first 4 months of 2019. So now that is why we divide by 3,500. Yet is the 4th month ending on August. Then we have our feeding cost. Remember, how much we feed our bees will affect how much we harvest. So now, meaning our feeding cost then becomes a variable cost. Feeding cost of 16 Rand 20 cents. And that 16 Rand 20 cents is 50 something thousand. It is 56,700. 56,700 divided by 3,500. Then the next cost is the fixed manufacturing overhead. That is fixed. Direct labor cost, remember, this is a fixed cost. Direct labor cost is not does not vary with the number of kg that we harvest. That is the right term. Does not vary with the number of units that are harvested, or number of kgs being harvested. Either we harvest 3.5 or we harvest 10,000 kgs, the fixed labor cost, which is beekeeping hours, remain the same together with their rate. Now we continue on that same note. We have our preservation cost. It was 1 rand. Preservation cost was 1 rand. Remember, the more we produce, the more we preserve, and the more preservation cost will incur. So that becomes a variable cost. Then we go to the next one, other variable farming overheads. Other variable farming overheads. Other variable farming overheads. Other variable farming overheads. It is 14,000 rands divided by 3,500 kgs. Remember, these prices are per kg. You want to bring that? They are all per kg, and the selling price is also per kg. You can verify that as I will be scrolling somewhere to some of them. There, the 60 rand was per kg. I divided by 3.5 kg, 3.5 kg, so the answer will be per what to divide with all the time. If you divide with whatsoever you divide with, your answer will be per what to divide with. I'm not sure if that is the English that is understandable. Now continue to that same note. We have our variable selling and distribution. Variable selling and distribution. I think it was 1 rand 5 cents. That is 1.5. Variable selling and distribution. Variable selling and distribution 1 rand 5 cents per kg. Variable selling and distribution. We have 1 rand 5 cents. There is no other cost that is related to this. Then we can now calculate our total variable cost and get to our contribution per unit. Our contribution per unit, then we have to say 16 rand 20 cents. 20 cents plus 4 rand plus 1 rand plus 1.05. It gives us 22 rand 25 cents minus 60 rand, we get 37 rand 75 cents. This is our contribution. Then we need to get to our contribution on lost sales. Contribution on lost sales or lost units. In other words, you take the number of units that will be lost, and we have indicated that only 300 will be lost because we do have 1.2 available, but we require to transfer 1.5. So 300 which was supposed to be sold externally, will now be transferred internally. Therefore, now we lose 300 of the external sales. Therefore, now we multiply that lost units by 37 rand 75 cents, which is our contribution, and this will give us the contribution on lost units as 11,325. Then after, we get to calculate what is called transfer price, or the compensation rate per unit, if I may say so. So now that means we have to say now opportunity cost, opportunity cost, or compensation on lost sales, if you want to use a different term. This will be compensation cost. Some of the questions they use that term, 11,325 divided by the number of units that are being transferred, which is 1.5, divided by the whole unit that we transfer, meaning the division, which is a behave division, will be compensated 7 rand 50 cents for every unit that they transfer to the honey processing division. Why? Because the 300 of the units were lost. So this will be the compensation, and the compensation called opportunity cost. Therefore, now our transfer price will be equal to incremental cost, which means our variable cost. Let us look at our incremental cost, and I want to bring your attention very importantly. When we're calculating our variable or incremental cost, we need to look at the incremental cost for internal purpose. Remember, preservation cost is not incremental cost in the context of internal, because preservation cost is only done for external sales. So we don't preserve for internal. So that preservation cost, although it's a variable cost, it will not be added to the incremental cost. The feeding cost, we do feed bees for the honey for internal sales. So the feeding cost will be, yes, the incremental cost. Other variable manufacturing overheads, that is, yes, it's not related to the external sales. Variable selling and distribution, that is for external sales, only when you sell externally. So this one is also out. Remember, direct labor is not even a variable cost or an incremental cost, but it is a fixed cost. So now, when we now go to the calculation of the transfer price, we say incremental cost, which is incremental internal cost only, not the one that are related to the external sales. Then we add the compensation. So now this will be 16 rand 20 cents plus 4 rand plus now the opportunity cost of 7 rand 50 cents. Let us check if this is 7 rand 50 cents or 55 cents. Yes, I knew this is 55 cents. 55 cents. Then after it will be plus 4 rand plus 16 rand 20 cents. I'm saying plus yet minus because the figure was already negative. So we have 27 rand 75 cents. So this will be a recommended transfer price. Recommended transfer price. This is the transfer price that we are recommending or will be charged. Now we go to the next information. The next requirement is with regards to the next division. Prepare the actual statement. That is the next division. The statement is the actual quantity statement. I will just do you a very lovely explanation on the statement, then a rough draft of the statement. Then we go to summarize the whole questions and we'll be done sooner. Then now we go to the honey processing division. The HPD owns a processing plant and operates a process costing system to produce MAMEPE. The production process begins with the purchase of HPD's only direct raw honey. Raw honey is from the two sources, which is the beehive division, meaning they buy from the beehive division, and the other one from the open market. We're not aware of that. At the plant, raw honey is put into the extraction process that separates honey from the wax to yield processed honey. The processed honey is then purchased, pumped into filter tanks that remove the remaining solids such as bee stringer. After the filtering process, a final product called MAMEPE flows into a setting tank before it is packed into individual products for sale, each consisting of 500 grams of the final product. This is very important to note, that one product is equal to 500 grams. In other words, one product is equal to half a gram. Sorry, it's half a kg in simple terms. 500 grams is equal to half a kg. In other words, 1 kg is equal to 2 units. I want to bring this one earlier. 1 kg is equal to 2 units. Why? Because 1 kg is made of 1000 grams. 1 kg is made of 1000 grams. And 1000 grams obviously is made of 500 grams and 500 grams. So 2 500 grams are equal to 1000 grams, and 1000 grams is equal to 1 kg, meaning 1 kg is equal to 2 products. So in other words, okay, I will also deal with that later on, but important to bring it now to your attention. It's good to master conversion at this level. In kgs and grams, you must be a master of that. All the direct raw materials required to produce MAPEPE are added at the beginning of the production process. That is very great. The direct labor cost and the production overheads are incurred evenly throughout the production process. That is also very great that the conversion cost, these are called conversion cost, they are incurred evenly, meaning if the process of production is 70%, our overheads are 70%, so what remains is 30%. Now, the wastage point occurs when the production process is 70% complete. That means this is the point of wastage or the point of spoilage, or some they call it the point of inspection. The resulting normal loss is 5% of the input that reaches the point of spoilage or the wastage point. So our normal loss is 5% of the units that reaches the point of spoilage during the period. I want to highlight that during this period, not during the previous period, because that would have been accounted in the previous period. All loss units are sold at scrap of 2 Rand per kg. At least we do make a revenue from the sale of the scrap units. 1 kg of the raw honey after losses and or gain yields 1 kg of MAPEPE. Then obviously 1 kg is equal to 1 kg. That is very simple. 1 kg is equal to 1 kg. Although 1 kg is equal to 1 kg, 1 kg is equal to 500 gram and another 500 gram. That means 1 kg is equal to 2 units. That still does not change. It does not mean our unit now or our product, completed product, is equal to 1 unit. They just tell you that after all the losses that have taken place, 1 kg yields another 1 kg. Management accounts extract from the actual results of the month ending 30th of April 2019 is provided to us below. We have our sales of MAPEPE and we have our sales revenue. How many units were sold, we don't know. We can only know that if we know the selling price, then we divide by the selling price. That will tell us how many units were sold. And the reason there's a question mark, we'll need this number to calculate probably another number in the future calculations. We have our opening finished goods. Take note, these are the finished goods, guys, finished goods. Remember, in the process, we process the kgs of the raw honey in order to become a finished product, meaning in the process costing statement or in the process costing quantity statement, we don't deal with the finished goods because finished goods are not in process, they are finished. And also the closing finished goods will not appear even if we get to know them. The closing finished goods will not appear under our quantity statement because they are finished. Under the quantity statement, we are dealing with the process of processing the material to become a finished product. Then after we have also we've been provided with the question mark of the opening finished goods and also the closing cost of the finished goods in terms of the rand value. Now they are the 2 question marks. We have the opening work in progress. That is where we are. Our opening work in progress is 60% complete and we have 1,200 kgs. Remember, the point of wastage occurs at 70%, meaning our opening stock is before the point of spoilage. That means the 1,200 kgs will reach the point of spoilage in the current period. That means the 1,200 must be part and parcel of the units that we have to calculate our normal loss on, because they will pass the point of spoilage during the current period. We have our closing work in progress 80%, 750. Remember now, 750 will be part and parcel of what was put into production in the current period. So now that means the closing units will also do pass the point of spoilage during the current period, because it will come from 0% up until it passes 70% and reaches 80%, then becomes closing stock, meaning the closing stock will also pass the point of inspection or point of wastage during the current period. So the units of the closing must be part and parcel of the units where we calculate our normal loss of 5%. Then after we have the raw honey that was put into production in the current period. We put this into the current period and there was opening, meaning our total that was available for production was 7,000. Now above that we have included in the 750, which is the closing. Closing is already inside in there. I'll explain that a little bit as we proceed. We have our direct material together with our manufacturing overheads for the period, and their total cost should be combined as one amount, so that we have that named as conversion cost. Then let us continue to complete the three additional information before I go through the analysis, and then after we summarize this question. Notes related to the above management accounts. Mamepe was sold at 65 Rand per unit throughout the month. So that means our sales there, where we have a total of 78, they were sold at 65 Rand. So now if we can say 783,250 divided by 65, this will give us 12,050. These are the sales of the completed units. Now in terms of completed units, what do we have? We do have opening finished goods. We also do have we don't have closing. That's all that we have. We have opening and sales. We don't have production and we don't have closing so far. Let us read further now. It says 10,800 of the opening work in progress value relates to the conversion cost, and the balance thereafter relates to the raw honey cost. That does not matter. They are telling us that the opening work in progress of 64,800, another one is 10.8 is conversion cost, and the remainder it is the raw material or the raw honey. That is not much of a concern for us. Then we continue now on that same note. This division completed and transferred 6,000 kilograms during the month. Now they completed kgs. Why? Because we had work in process, work that was incomplete. We put other more kgs and said the total that was available to be completed and transferred was 7,000 kgs. But they are telling us that they processed the 6,000 kgs. Remember, 1 kg produces 2 units, because 1 kg is equal to 1,000 grams, and our product, one product is equal to 500 grams. I mentioned that before. In other words, now our kgs double our units. So in simple terms, we completed 12,000 units. We have to times this by 2, and we say it will be 12,000 units, meaning we finished or completed 12,000 units, and these 12,000 units are from the 6,000 kgs. Remember, the weight of the 12,000 units is equal to 6,000 kgs. That does not change. The weight of the 12,000 units is equal to 6,000 kgs in terms of the weight, because kg is the weight. But in terms of the number of units, it is 12,000 units. Now we know what we did not know before. We have our opening finished goods. We have our production completed during the year. We have our sales. Therefore, the closing, which is in question there, can be answered at this point in time. Now let us immediately do the calculation of the closing finished goods now and see where will that take us. Then we're calculating closing finished goods. Closing finished goods. We have our opening finished goods as 150. We have our production or completed and transferred, which is 6,000 kgs times by 2. that is 12,000. We need to deduct our sales of 12,050. This will give us closing finished goods. Closing finished goods, it will be 150. Opening plus 12,000 of the production minus 12,050. That gives us 100 units. These are the units that were completed and left at the end of the year, not sold. Then let me say closing finished goods in kgs is equal to 50 kgs. I want you to say this: 50 kg is equal to 1,000 because our kgs double our production. So now in kgs, this is 50 kgs, but in units, that is 100 units. This is not important, but I'll just explain it to you when we do calculate the value of the closing inventory. Now let us continue on that same note. Do we have any other information provided? No, that's not at all. We are required to prepare the actual quantity statement of this division for the month ending April, the whole of the 7 marks. Then after we have the whole of the 6 marks. 2 marks would just be the summary of the question. Now, actual quantity statement, we know that statement is, we have the input here. Not going to be writing everything, guys, all the details. We have the details, we have the output here. We have the direct material, we have the conversion cost. Then your material and your conversion cost are divided into percentage and quantity. I won't be dealing with that in details. Then we do that. Input, we have our opening work in progress, of which our opening work in progress was 1.2. We have what was put into production, 5,800. Then after we have completed, this is the standard completed from opening work in progress, then from current production, then after we'll have completed and transferred. Completed and transferred. Then we deal with the abnormal loss, normal loss, then after closing stock. Before I go to this one, I need to draw this underline here also and agree that at 70% it is the point of spoilage or the point of wastage. This is the wastage point at 70%. And our opening stock is at 60%. If you remember, this is our opening stock. Our opening stock is made of 1,200 kgs. And we put into production 5,800. This is what was put into production. And our closing is at 80%. This is our closing. And our closing is 750 kgs, just to verify that number. Our closing is 750 kgs at 80%. Now, why am I bringing this across? Is because I want to calculate the so-called normal loss. Why did you complete the space? I want to calculate the so-called normal loss. Remember, normal loss is calculated from all the units that reach 70% during the current period. All the units that reach the point of spoilage during the current period. Now, remember, we were told in the beginning that the company is using first in, first out method. That was not by mistake. meaning the first inventory that will go through the production process is the 1,200 that was incomplete. And at the point of spoilage, very important to highlight that there is a 5% loss. That is the key in everything that I'll be doing now. There's a 5% loss, meaning now when we took this inventory of 1,200 and we processed it, it went 65, 66, 67, 68, 69. When it reached 70, it decreased by 5%. Then immediately decreases by 5%. Then you say 1,200 multiplied by 0.95%. Then it's no longer 100%. Then it loses its value and weight from 1,200 to 1,140. Meaning the kgs that will contribute to the output will be 1,140, and that will go throughout up until it is finished. So now when we are calculating the units that are completed, remember I said completed from opening work in progress, it will be 1,140, not 1,200. In other words, we say this is the opening we had, and this contributed to what was completed, but what contributed in there was only 1,140. Then in terms of material, that will be 0. Why? Because all the material were all there. In terms of conversion cost, it will be 40% because only 60% of that was available. Time by 0.40. Sorry for that. It will be from 1,200 time by 0.40. Then this will give us from 1,140 times by 0.40, that will be 456. In terms of conversion cost, then there is still 456 that will be completed because the rest was already 60% processed. Only 40% will be completed in terms of conversion cost. So that will be the percentage column. In terms of material, that will be 0 because there was no material that was put in the current period from the opening. Why? Material is added at the beginning of the period. When the material was put in the beginning of the period, all of it was 100% in there. When we continue in the next 4 months, there is no material put in the production from the opening. It was already there at the beginning and accounted for in the previous period. Now, if we completed 6,000, remember, we know that is 6,000, 1,140 minus 6,000. Now, what will be completed? 6,000 minus 1,140. That means we are left with 4,860. Remember, this is completed from current production. From current production. This is completed from opening work in process, which is we start with that one first in, first out. When that one is dealt with, goes through the point of wastage, then after we go to the next one. From that one, we only need 4,860 in order for us to complete and transfer 6,000 kgs as it was mentioned to us. HP completed and transferred 6,000 kgs during the month. Remember, the 6,000 kgs is equal to 12,000 units. Remember, we process the material in order for it to become a finished product. So we deal with the material in the process, and when that process is done, then it becomes a finished product. So hence, we deal with the kgs, which is the material used to convert to get the final product. Then obviously now in the current production, the one that was put into production the current period, all material was put in the current year, then that will be 4,860, that will be 100% of material. Then 4,860, it will also be 100% of conversion cost. Very important to emphasize is the fact that okay, let me not explain anything on this one. It's not necessary to go in details. Then after we have a total of 4,860 and 4,860 plus 456, that will be 5,316. Then now we have dealt with the units that were completed. Then we go to what we call the normal loss. We go to what we call the normal loss. Normal loss is from all the units that reach the point of spoilage, meaning that reach the 5%. Now, all the units that reach the point of spoilage is the opening units, the whole of that 1,200. 1,200. And we have calculated that 5%, 1,200, plus the whole of the 5,800 that was put into production in the current period, 5,800, which gives us 7,000 kgs. So now our normal loss will be 5% of these units. What about closing, Andile? Remember, our closing is at 80%. And we said the company is using first in, first out method, meaning we first processed this 1.2, it went till the end. So what was left was 5,800 that was put into production in the current period. And it went through. It reached 70%. Was there any closing? There was no closing. It went through the inspection. Then when it came here around this area, 750 was incomplete. The rest was completed. I'm not sure if I'm clear on that. So that means our closing is from what was put into production. So now if it came from 0, we need to check where is the closing position, the closing positioned. If the closing is positioned after the wastage point, meaning it went through the point of spoilage during the current period, because we are assuming that the closing is not from the opening inventory, meaning we assume that all the opening inventory went through up until the end. Then whatever the closing was from what was put into production in the current period. You might need to get note of what I'm explaining in my other videos for MAC3761. Therefore, now we have a total of 7,000 of the units that passed the point of spoilage termed by 5%. This gives us 350. Now I want to bring this to attention once again for a different perspective with regards to the closing. Because some of you might be like, what if, Mr. Mtongwana? No, what if the closing is before the point of spoilage in the current period? That is very easy and very simple. If your closing is sitting here at 65%, let us say this is your closing, it's at 65%, 750. Then now what are we going to do? We're going to say 1,200 plus 5.8 minus 750. Because now this 750 must be removed from the one that was put into production because it did not pass the point of spoilage. So now we need to remove the closing because the closing did not pass the point of spoilage. So we have to say minus 750. I'm not sure if you're getting me on that. But if the opening, now take note of this, if the opening was at 80%, if the 80% was the opening, we wouldn't add. We'll just not do anything about the opening because it has already passed the point of inspection and is not included in that 5.8 that was put into the production in the current period. So if the opening did not pass the point of spoilage during the current period, we don't do anything, we just put it aside, we don't minus anything. But if the closing did not pass the point of spoilage in the current period, then we have to remove it from the units that were put into production because your closing is inside the units that were put into production in the current period. Now our normal loss is 350. Therefore now under our quantity statement we say normal loss is 350. We have 0 throughout. Material is 100% because it was all there, and our normal loss took place when the inventory is at 70%. So now out of that 350, we will have 70% under our conversion cost, but still we do not allocate normal loss to the material and we don't allocate normal loss to the conversion cost if we are using a shortcut method. And this is a shortcut method. What is a shortcut method? A shortcut, or when is the shortcut method used? A shortcut method is used if the opening inventory and the closing inventory pass the point of spoilage during the current period. The minute your opening inventory passed the point of spoilage and your closing inventory passed the point of spoilage during the current period, therefore a shortcut method shall be used or must be used. So now in such a case, we then do not allocate our normal loss to the rest of the columns, but only under our output column. That is, the reasoning is the use of the shortcut method. Shortcut method is once again used only when closing and opening passing the point of split during the current period. We have abnormal loss. Abnormal loss. Our abnormal loss, now we say our abnormal loss, I use a different calculation. Abnormal loss, we say opening cages were 1,200. Then after we have the one that was put into production. We have the one that was put into production, which is 5,800. Then we have the one that were completed. We have the one that were completed. Completed is 6,000. So if we had 1.2 at the beginning, we had 5.8 put during the year, and available for production was 7,000. Now, if we deduct what was completed, which is 6,000 completed and transferred, that means now what is supposed to be our closing is 1,000 kgs. This is marginal closing, or closing before losses are taken into account. I think that is the best term. It's just my own terminology. This is closing before losses are taken into account. Then let us look at the actual closing now. Then you say minus actual closing. Our actual closing is 750. Then the question is, what happened to the 250 kgs? Then the 250 kgs is the total loss. In other words, you say how much was the opening, how much was put into production, and how much was completed and transferred. That will give you the closing before losses are taken into account. Then after, I'll say how much was the actual closing of the material. Let us look at that actual closing of the material. Here, the closing work in progress of the material is 750. So now you say the closing before the losses minus the actual closing, it will tell you the difference is the loss. Then I'll say if our difference of the loss is 250, how much is supposed to be our normal loss? Is the loss above our normal loss? The answer is no, because our normal loss is 350. So now if our normal loss is more than the total loss, therefore now we have abnormal gain. Abnormal gain. We gained abnormally, not expecting this gain. So our abnormal gain will be 100 kgs. Why? Because our total loss is more than our our normal loss is more than our total loss. So our abnormal gain then becomes negative 100 kgs. Then your abnormal gain gets to be allocated throughout, but obviously at 70% when it comes to conversion cost. Why so? Is because that took place when the inventory is at 70%. So that becomes 70 rand, and that is at 70%. Remember, conversion costs are incurred uniformly. When the loss takes place at 70%, that means we have 70% of the conversion cost incurred for that product or process. Then after we have our closing. We already know that our closing is 750 and 750 under material. Conversion, we calculate our closing and say, where is our closing? Our closing is at 80%. So we only need 80% of that for conversion cost. So that will be 600, and percentage wise, that is 80%. We draw the line and we are done with the quantity statement. Then we say this will be 7,000. This will be 7,000. They must always match. Then after we have 4,860 plus 750 minus 100. That gives us 5,510. Then we have conversion 5,316 plus 70 minus that's not plus 70, it's minus 70, the abnormal gain, minus 70 plus 600. Then we have 5,846. This is our quantity statement. Please draw it very properly and very looking good with a good writing. I'm also rushing for time because some time is spent explaining. Now, this is our quantity statement and it's done and dusted, completed. That was how many marks in the requirements? It counted a couple of marks, 8 marks or 7 marks. That was the whole of 7 marks. Now we are going to the 6 marks question. 6 marks question, I'll do it in the bit longer way because the shorter way will not make you understand the other dynamics of this question. Calculate the actual closing finished goods value as it would have appeared in the income statement. Remember, we're talking about the actual finished goods. We have already calculated the finished goods. If you remember that one, our finished goods, we calculated them to be 100 units. This is our finished goods. Now we need to calculate the value of that finished goods. Let me just then draw here at the bottom. For us to be able to do so, we need to know the cost per unit. That's the first thing. Cost per unit. Or else we need to know the cost per kg. If we multiply by kgs that I explained, we need the cost per kg. But our first answer will be automatically per kg, but we need to convert it to be per unit. Then after we multiply by the units, you'll still get the same answer. I'll show you the both ways. So we are looking for the cost per unit, and I want to say per unit because the kgs will be more of an easy way. Then now let us go on that same note, calculating now the cost. We know when you're calculating the cost, we must have the total column. We are doing the cost statement now. Then we have the direct material. We have now the conversion cost. Then we will have opening work in progress. Opening work in progress, which is 64,800. If you remember that cost, we have the cost of the opening work in progress. The cost of the opening work in progress was opening work in progress 64,800. We have put into production, and our raw material put into production in the current period was 331,300. Then after we have current production or current period, direct material 331,300 or 331,600. Yeah, 331,300. 331,300. Then we have our conversion cost. Our conversion cost, it must be the sum of the two. It must be the sum of the two, which is 56,920 plus 60,000 rands. This gives us 116,920. 116,920. That will be our conversion cost, 116,920. Then we need to calculate the scrap value, the revenue from the sale of the scrap value, the revenue from the sale of the scrap products, the revenue from the sale of the scrap products of the abnormal products. 2 times by 350, our abnormal loss was 350 units, and those 350 units were sold at 2 rand per kg. We only allocate that under material. It does not go to our conversion cost. Always under material, not under our conversion cost. 116,920. We have 331,300 minus 700. That is 330,600. We have 64,800. Plus 331,300 plus 116,920 minus 700. The total will be 512,320. That is the total cost. others for the current period, others including the previous year. Then we need to calculate our cost per kg. Then we take the cost of material, we divide by the kgs of material. The cost of material we divide by the kgs under the direct material column. We take the total of 5,510. 5,510, and we take here the total of the conversion cost column, which is 5,846. 5,846. 5,846. So this will give us the cost per kg because we divided by kgs. Then it will be 330,600 divided by 5,510. This gives us 60 rand. Then we have 116,920 divided by 5,846. That gives us 20 rand. So our total cost will be 80 rand per kg. 80 rand per kg. Now, meaning for 1 kg, the cost is 80 rand. I want to highlight that. For 1 kg, the cost is 80 rand. That we incur for 1 kg in terms of material and conversion cost for this period. Now, our product, cost per product now. Or our cost per unit. We need to say 80 rand per kg. Multiply this by the required kgs to complete 1 unit, which is 500, divided by 1,000. Remember, to complete 1 unit or a completed unit was provided to us as 500 grams. Meaning now if we have 80 rand per kg, meaning the 80 rand is per 2 products, because 1 product is half a kg. So we need to multiply by 500 divided by 1,000 grams in a kg. That means the equivalent cost per unit is 40 rand. But the equivalent cost per kg is 80 rand. So now the equivalent cost per unit will be 40 rand. So now we can go up and we have calculated our cost. So our number of units that are finished at the end of the year. Then I will say cost of closing inventory. Cost of closing inventory, it is 100 times by 40 rand. That will be 40 times by 100. That gives us 4,000. So this is the value of the closing inventory. But if you decided to take the 80 rand per kg, you'll have to multiply by 50 kgs, because 50 kgs makes up 100 units. I hope you're clear with that. You still get to the same 50 times by 80. That will still give you the value of the closing inventory in material equivalent, if I may say so. In kg equivalent will be 4,000. So at the end of the day, you still get to the same 4,000. That was required. Now we are on the last part of the question, on the very last part of the question. It further says that from the process costing perspective, briefly contrast the treatment of the normal loss value to that of the abnormal loss value in the income statement. One common thing between the two is the fact that abnormal loss is valued, or abnormal loss value is treated as a period cost in the period it is incurred. Abnormal loss value is treated as a period cost in the period it is incurred. and abnormal loss is presented as a separate line item on the face of the income statement. What do I mean by that? I mean, when we did income statement, if there was abnormal loss, we would have to record abnormal loss somewhere there. That's what it means. Abnormal loss is separately presented in the face of the income statement. So we'll have to have a line item there, abnormal loss, and we record it with its separate amount. So abnormal loss is separately disclosed or presented as a line item in the face of the income statement, of which now contrasting that the normal loss is not separately presented in the face of the income statement. So that is the major differences between the two that they are looking for. With those words, guys, you've been wonderful, you've been good. Thank you. Subscribe. If you have any question, don't hesitate to get my contact details or comment on the video. I'll give you my number, then we can chat privately. With those words, guys, thank you very much. Subscribe and subscribe.